Good day, everyone. I believe we are all here to uh, join me again in today's week webinar. Yes, and I'm glad to have each and every one of you here today. So I would like to know where you are watching me from. What's your location in Nigeria, Africa, outside Nigeria? Let me know your location so you can always share that in the comment section. So today we'll be looking at how to use technical analysis in trading. My name is Tumise Olaoluwa. Great. So let me use this comment section to tell me your location. I'm very interested in that. I'm very interested in knowing your location. So use the comment section to tell me your location, where you are watching me from. Okay, Tobechuku is watching me from Lagos, Nigeria. Okay, fantastic. So today we'll be looking at how to use technical analysis in trading. Now, the question you want to ask yourself is, what is technical analysis? Because technical analysis is also a fundamental part of trading where you need to know. Now, technical analysis is a range of techniques that is used to try and forecast future price movement of financial products based on historical price movement and patterns. Now, so technical analysis strives on analyzing past data and forecasting future price movement. Analyzing price data and forecasting future price movement with either the chart pattern, the price moves, or the candlestick. So what technical analysis is trying to do is looking at what has happened, coming from a positive approach. What has happened, what is happening, and what will happen. So technical analysis tracks the data of the historical price of what has happened and look into what is happening and then forecast what will happen. Right? So now a deep dive into what we have here. We have different types of technical analysis. We use the chart pattern, the price movement, and candlesticks. Now let's look at time frames. It's also a part of technical analysis. Now a quick one is, time frame refers to the amount of time that a trend lasts for in the market. So how long a trend lasts in the market is what we call the time frame. So we can look at the 1 hour time frame to look at, okay, how did this trend last? What happened in the last 1 hour, or what has happened in the previous 1 hour each. Now, so you can see from here, this is 1 hour time frame. So each candle on this 1 hour time frame tells us what has happened in the last 1 hour. So if you look at this now, right, you will see that what has happened in the last 1 hour is that in the last 1 hours on the 1 hour time frame is that market has been falling. Right? That's to tell you what this time frame is telling you, that each of this candle is in 1 hour. Each of this candle was formed in 1 hour. And in the past hours of each 1 hour, the market has been falling. Now, if you look at 4 hours, each of these candle on the 4 hours time frame is formed in 4 hours. So this green where my the arrow key is was formed in 4 hours. This red too was formed in 4 hours. So now the question is, what has been happening on the 4 hours time frame in the previous 4 hours each? So we could see that price has been falling in the past 4 hours. Right? So this is time frame, the daily. Now you can see what has been happening too on the daily candle. Price has been falling on the daily candle. right? So if you look at it on the 15-minute candle, look at what has been happening on the 15-minute candle. Price has also been what? Been falling on 15-minute candle, on the 30-minute candle. So because each of these candlestick was formed in 30 minutes, or in this 30 minutes time frame. So this time frame tells us what has happened in that period of time, right? In that period of time. Now, the Forex chart. Now, the Forex chart has to do with a chart that shows price movement and volumes of more pairs, of more currency pairs, right? So now let's take a look at the Forex chart. Now, this is an icon for looking at the Forex chart. We have three types of Forex chart. As you can see, what pop up here, we have the bar chart, we have the candlestick chart, and we have the line chart. The bar chart, the candlestick chart, and the line chart. Okay, we have a friend from Indy. Okay, it would be great if you just communicate in English, right? So we could get the message clearly, right? Yeah, you don't need to. What you do is you can then put your language on Google Translate and then translate it so that I can better communicate with you, and you can always drop your question in English, right? All right. Now, so great. So now we've looked at this. So now let's look at this chart, this 1 hour time frame in a bar chart. Now, can you see? This is a bar chart. This is how a bar chart looks like, right? A bar chart, right? So now look at this place. This place shows that this line here that come out here shows that price opened at this place. This is where the price opened and dropped down to this place, but later came up a bit and closed here, right? Now let me draw up my board so that we can have fun understanding what the bar chart is talking about. Okay. Okay. All right. I think this was where we stop. Yeah. Okay. Fantastic. Now. So what? How is the bar? Does the bar chart forms? So you can see it's like opening price. It drops, went up a bit, and closed at this level. That's how the bar chart is always formed. Okay. Then if it's a bull market, it's a bull candle, bull chart, bull bar chart. Then market opens below, right? Goes up, comes down, and closes here. That is what we are seeing at this place now, right? That's what we are seeing here. Market opened here, went up, and closed here for the bull, for the green candle. Then for the bearish candle, market opened above and closed below. For the bullish candle, market opened below and closed above. That's for the bar chart. Now let's look at the candlestick chart. Now look at the flip. Look at the flip. So it's just like the candlestick chart now is like a flesh to the skeleton of the bar chart. So the bar chart is like a skeleton. It's not, it's difficult to perceive if actually what's really happening in this place compared to the candlestick. See that flip. So the candlestick now fleshings up what is happening on the bar chart, right? So easily from here we could say, fine, this is a green candle, a bullish candle. Then this is a bearish candle, right? A bearish candlestick. Okay. Now this is a candlestick chart. Then this is a line chart. You can see, a line chart. A line chart is just going to show us lines of the contours. You can easily use the line chart to get the edges, the exact edges where you should lay your lines on, your horizontal lines or your vertical lines or your trend lines. So I've explained this: the line chart, the bar chart, the candlestick chart. Okay. So looking at the candlestick chart as we've explained now, from here you would see that the candlestick chart. Let me pull up this. Okay. Now the candlestick chart opens here, right? Opens here, went up to this level, came down, and closed at this level, right? So for the bearish candle now, it opens above, came down, came up here, and closed at this level, right? So you can see now this is the candlestick chart, right? That's the candlestick chart. Okay. Now, this is a bullish candle and this is a bearish candle. Now, a bullish candle opens below and closes above. A bearish candle opens above and closes below. Right? You can see it practically here. Right? Practically here. That this candle opens here, opened at this region, goes up and closes here. So a bull candle will always open below and close above. A bull candle will open below and close above. But a bearish candle will open above and close below because it's falling. So it will open above and fall and close below. But a bullish candle will open below and bounce up and close above. Yeah? I want to believe you understand that, right? Okay. So I've shown us, I've explained to us the opening price and the closing price. So you can see that the price at which, the level at which price closes, that's the closing price. So we see that from here, price opened at this level, right? It went down a bit, but it was pushed up. That's why we have this wick here. This wick, this line here, we call it wick. Now, it was pushed up, right? It went up to this same level, but could not sustain at this level and was pushed down and closed at this level, right? This level at which it closed is our closing price. This level at which it opened is our opening price. I want to believe we get it that way, right? Okay, we have Ahmed from Pakistan. Yeah, thanks for joining us. I want to believe you are catching up. Okay, now for the bearish candle now, it opened below. Sorry, for the bearish candle now, it opened above, right? Pushed up, could not sustain up here, then pushed down to this level, and then closed at this level, right? Sorry, it opened at this level, went up, could not sustain at this level, came down to this level, could not sustain there, came to this level, and closed at this level. This level at which it closed is our closing price. This level at which it opens is our opening price, right? This O stands for open, C stands for close. O stands for open, C stands for close. So it opens here and closed here. It opened up here and closed here. That's for the bullish candle, it opens below and closes above. For the bearish candle, it opens above and closes below. I want to believe you guys are getting it, right? Fantastic. So I've explained the high and low, right? Now let's look at the high and low from here now. The price, the level at which price got to but could not sustain, right? This place is the I, the I price. The level at which it dropped below but could not sustain is the low price, right? So from here we have the high price, here we have the low price, right? Fantastic. Elliot, watching from South Africa. Thanks for joining us. Okay, now, like I explained earlier, now this is the body of the candlestick. So we call the body, the full body, right? Now this line to the upside we call it the upper shadow. It's also called wick. Right? It's called wick. Right? We also call it the upper shadow. Right? We also call it tail. We call it tail. So we could see the tail of this bearish candle, the wick to the upside. The tail, right, to the upside, and the tail to the downside. You can see it here, to the tail to the upside and the tail to the downside. This is realistic, as you can see here. See it here. So this is a wick. This is a wick, right? So this is a wick. You can see this is a wick. This is a wick. This is the full body, right? But the lines outside that full body is called wick. This is a full body, but the line outside that body is called wick, right? Wick, as you can see it on my board here. Wick. That's the what we call it. Okay. I want to believe you are following. Let me know if you are following. Philip said nice. Yes. Thank you very much, Philip. Let me know if you are following. Ademiju Oluwatobiloba is watching from Ogun State. Amaka Faith is watching from Lagos. Elliot is watching from South Africa. Sabia is watching from Pakistan. Okay. I have a lot of persons also watching from Pakistan. Ahmed is watching from Pakistan. Thanks for joining us. I believe you are getting value. Let me know in the comment section if you are getting value. If you're understanding, let me know in the comment section. Okay? Now, let's talk about support and resistance. So, support represents a low level a currency price reaches over time. And resistance is a high level a currency price reaches over time. Let's take it. I'm quite practical. Now, look at this. What do you think happens to this level here? This level here. What do you think happened at this level here? Now, this level here is the level of resistance. Can you see? This level is the level of resistance because price was resisted strongly at this level. Right? You can see price coming up to this level and was rejected. It came down. It went up again. It broke through that level. It came down again. It came to test that level again, but was rejected. Now, this level has become a resistance level, where a high level where price is finding it difficult to break through. It's resisting. So price wants to shoot up and break through it, but it's resisting the price from breaking through it. Right? That's resistance level. Now, looking at support level, look at what's happening here. Right? Look at what has happened here. At this level here. This is support level. Right? Price is finding it difficult to break down below this level. It was pushed up. It came down to that same level. It was pushed up. Came down to that same level. It was pushed up. Now, that shows that price is trying to break down a particular level, but price was rejected upward, right? Price was rejected upward. So that's support. Support. So if I have a pen and I drop this pen and it falls on my hand is acting as a support for this pen. My hand is acting as a support for this pen, right? This pen could have fall down straight, but because my hand is there, it's falling on my hand, right? It's falling on my hand, acting as a what? As a support, right? Fantastic. I want to believe you get that, right? Okay. That is support and resistance. Support and resistance. Okay. Now let's talk about price rebounds. Price rebound. Price rebound. What level are the prices rebounding from? A rebound occurs when currency price begin increasing after a period of decline. Now look at this. After a period of decline, at this level, let's check out another. Okay, fantastic. Look at what's currently happening on Euro USD, right? Price has been falling consistently for a while now, for some days, but it got to this level. Let me pull up. It got to this level, right? And price rebound. Price rebounds, right? You can see price rebounding. Price is rebounding. Let me zoom in. You can see price rebounding. Price is rebounding. That's price rebounds, right? When price is rebounding from a level that from a consistent fall and is trying to rebound, find a direction upward, or it has consistently been going up and then it found a direction upward. Okay, that's price rebound. Now, how to analyze the forex market? Number one, you need to understand the drivers. The act of successful trading is partly due to an understanding of the current relationship between market and the reasons that this relationship exists. It is important to get a sense of caution, right? Remembering that this relationship can change over time, right? Now, also you need to understand the chart, like I've explained. The candlestick chart, the bar chart, and also the line chart. You need to understand the chart. It is helpful to traders to chart the important indexes for each market, over a longer time frame. This exercise can help a trader to determine the relationship between market and whether the movement in one market is inverse or in contact to the other market, right? Okay. Now you also need to look at consensus in other markets. We can gain a perspective of whether or not the market are reaching a turning point, by charting other instruments. Now you want to look at let's say you are trading on the Euro USD, right? You want to look at what's happening on the USD JPY, like what's USD doing with JPY, or you want to look at what's the relationship that's occurring between New Zealand dollar and the US dollar, so that in order for you to now say, if the New Zealand dollar and the US dollar are going up, so if New Zealand dollar is stronger than the US dollar, right, and you now check euro, like now look at this now, New Zealand dollar and US dollar is going up, right? Now this is euro, New Zealand dollar is going down. right? So which means the dollar is weak compared to New Zealand dollar, and also the euro is weak compared to the New Zealand dollar, right? So you let's say the dollar is strong against the New Zealand dollar, right? And the euro is weak against the New Zealand dollar, right? Now, if the euro is weak against the New Zealand dollar, and the New Zealand dollar and the New Zealand dollar is weak against the US dollar, which means that the US dollar will be strong against the euro. I don't know if you get that. Now, so let me tell you something now. Let me just pull up something and make it clear here. So if we have euro USD, you want to trade euro USD. I'm just trying to tell you, sometimes you want to compare the market, and then NZD. Let me pull up eraser. Okay, NZD USD, then euro NZD. Right? So now, if the dollar is strong against the New Zealand dollar, right, and the euro is weak against the New Zealand dollar. So if the dollar is strong against the New Zealand dollar and the euro is weak against the New Zealand dollar, what do you think? Will the dollar be strong against the euro or be weak against the euro? Let me know in the comment section. So if the dollar is strong compared to the New Zealand dollar, right, and the euro is weak compared to the New Zealand dollar, and you want to trade euro USD, what do you think you'll be doing? Or what do you think you should do? Should you buy the USD, or you should sell the euro? Should you buy the USD or sell the USD? Should you trade, like now, the euro USD now? Would the euro be stronger against the dollar, or the euro will be weaker against the dollar? I'm waiting for your response in the comment section. So if the dollar is strong against the New Zealand dollar and the euro is weak against the same New Zealand dollar that the dollar is strong against. So if the dollar is strong against the New Zealand dollar and the New Zealand dollar is strong against the euro, which means the US dollar is stronger than the euro. Fantastic. Yes, you sell euro USD because the dollar is stronger against the euro. Now the euro is weak against the currency that the dollar is strong against. So if the dollar is strong against the currency, and that weak currency when compared to the euro is strong against the euro, which means the euro is even weaker than the weak currency compared to the dollar. So the dollar is stronger than the two currency both. You get? So now, which means the euro is more weaker compared to the New Zealand dollar when paired with the US dollar. Great. Someone said sell euro USD. That's fantastic. Ubong said the USD will be stronger. Absolutely correct. The USD will be stronger. I want to believe you get that. So we proceed. Yes, so we've had an overview of the types of charts, candlesticks, time frame, support and resistance. I want to give an opportunity to anyone who have a question to drop their question in the comment section, while I will take the little time we have to attend to them. Drop your question in the comment section. Drop your comment in the comment section. I'm waiting for you. Drop your comment in the comment section. Drop your comment in the comment section. I'm waiting for you. If you have any question, just drop it in the comment section. We are looking into question and answers now. Anybody who has a question? Okay. So in the absence of question, let me just have a rundown of what's happening, what we've talked about. So you can see this level above here, where I'm moving this thing here, is a resistance level. Why? Because we've seen price touched it and was rejected. This level below here too is a resistance level, because price has touched it and rejected. Came here, it broke through, came here, came down, came to that same level again and was rejected, came to the same level again, was rejected, moved around above that same level, came down before breaking out. Right? So we can be able to spot your support and resistance level now. So you can see this place below here is a support level, right? Because price was trying to fall and break this place, but it supports it and moved price up. Came down again to that same level and the price moved up. That's support level, right? Support level, right? Now look at what's happening here now. This support level is trying to be broken. This candle is trying to break through the support level. If this weekly candle closes below this level, we might see price fall further. Right? Great. Drop your question if you have any question. Yes, you would always get the recording. It would be on our YouTube channel. You can always come back and revisit it. Yes. Okay. So we've looked at chart patterns. We've looked at different type of charts. The line chart. So you can see the line chart helps you to spot the real contours. The edges of where you could actually draw your proper support and resistance. Okay, so understanding time frames. So these are different time frames now. This is a monthly time frame. So each candle on this time frame occurred in a month. So currently we are in the month of October. Now, so last month, which was September, this is it. This is how the candle closed on this currency pair. And August, this is how the candle closed. July, June, so these are how the candle closed, right? So is the candle on the monthly time frame is only telling you what happened in 1 month. Then you go to the weekly time frame. Each of these candles happened in 1 week. This shows what has happened, what has happened last week, what is happening this week, what has happened in the previous weeks. These are what is showing here. Okay, then daily time frame. Each candle is formed in 1 day. What has happened in the past, in the previous days. The 1 hour time frame, the 30-minute time frame. Okay. So if you buy a currency at this level, and the price, if you buy and the price goes down, you'd lose your position, right? So because is if you buy a particular currency and it keeps going up, you make money, right? If you sell a particular currency and it keeps going down, you make money. But the moment you buy and it goes against you, so you just lose, you lose, the position, you lose the trade. Yeah. Okay, someone is asking. Okay. Yes, so there are more past webinars we've done that explains more better into how to get started with trading, identifying opportunities in the market and the like. So you want to revisit them. But today we are looking at understanding those technical analysis. The overview, the charts, the candlestick chart, the bar chart, the line chart and the likes. Okay. Okay, someone is asking. Yeah, so I've answered your question. How to, if you buy a particular, so you have to put in your risk management, right? You don't want to go all in with all your money taking a trade, right? So you want to manage your risk so that when you buy and it goes against you, you won't lose more than you can bear, right? So I want to appreciate each and everyone who have made it so far to our webinar tonight, and I believe that you've got value and you've been getting value, and that's why you are here. We look forward to seeing you in our next webinar. Stay with us and get the quality education and insight on forex trading. Thank you very much.